Well, good morning, Yogendra Rana here. The topic for our discussion today is always opt a higher term life cover. Always opt a higher term life cover. The customers looking to buy term insurance are increasingly favoring higher sum insured, driven by rising awareness and attractive policy features. So, while focusing on shorter duration covers, industry insiders suggests that higher premiums for long tenure policies has proved to be a dampener. According to industry estimates, the share of customers opting for a cover less than or up to 70 years increased to 62.5% in 2025 from around 47% in 2023. So while the share of those opting for over 70 years cover has reduced to 36.8% from 52%. So customers are also opting for cover worth rupees 2 crore and above instead of rupees 1 crore earlier. The term life insurance market is experiencing a shift driven by increased consumer awareness and evolving financial planning needs. So customers are opting for higher coverage amounts, moving from rupees 1 crore to 2 crores or 5 crores, reflecting rising incomes and a better understanding of financial protection. However, instead of extending policies up to the age of 75 to 85, most buyers now prefer to cover until the age of 60 to 70, aligning with the typical end of financial liabilities and dependent responsibilities. So the industry has seen a 5 to 8% drop in average coverage age, now trending between 65 and 70 years. There are also other features such as cost of premium for longer tenure and new policy features like smart exit option or a return of premium excluding GST, which comes with a condition of minimum policy duration and a particular window where you can exit at an age when financial liabilities are generally over, are also influencing this shift. So, smart exit in life insurance allows policyholders a refund for premium paid if they exit the insurance plan before maturity after holding it for a minimum duration. However, it will not include premiums paid for any add-ons or due to underwriting risk or GST. So, for the life insurance companies are also informing their customers and distributors on the importance of having term insurance policies till the age where their income is essential for the dependents or there is a need to replace the loss of income. Also, a longer tenure term insurance policy also increases the premium. Now, term insurance should ideally cover individuals only during their income earning years. So, for salaried individuals, this typically ends around age 60 and for the self-employed possibly until 70. So, covering beyond this age increases premiums without serving the original purpose of protecting against income loss, as there is no income to replace post-retirement. So, by advocating coverage only until age 70, a life insurer called Tata AIG is aiming to either increase the sum assured for the same premium or reduce the customer's financial burden, ultimately offering better value. So, even as individuals are not opting for longer tenure term insurance policies, they still understand that uncertainty is an improper risk and opt for shorter termite products. So, From an insurance company standpoint, this would be beneficial as claim risk come down, as well the corresponding provisions. So insurance companies would need to strengthen the persistency tracking at their end to ensure renewal of such policies. So picking a term insurance plan feels like a simple decision until it is not. You are told its essential numbers get thrown around, and suddenly you are left wondering, am I overpaying? Is the cover sufficient? What if there is a smarter way to figure all these out before committing? So that is where a term insurance premium calculator comes in. It is more than just a tool. It is your first clear look at how much cover you can afford and what it could truly mean for your family. So when you are buying a term plan, using a smart tool to compare premiums is how most people are doing it in 2025. It puts you in control, shows your options, based on the real inputs, not guesswork, and can save you money without cutting corners on protection. So understanding how term insurance works before you compare. A term plan works on a fairly simple principle. You pay a fixed amount called premium every year or month, and in return your family gets a lump sum, the sum insured if something happens to you during the policy term. So it's not a saving product. You don't get anything back unless you opt for a return of premium feature, which many plans now offer. Now here is the part that needs more attention than it usually gets, because premium amounts can vary widely even for the same sum assured. So two people of the same age and income level might end up with very different quotes simply because of lifestyle habits, medical history, or even the insurers that they have picked. So that is where a term insurance premium calculator helps you cut through the clutter. You key in your details and see a realistic premium amount right away. So how a term insurance calculator works? The idea of using a calculator might seem basic, but the insight it gives is far from that. Think of it as a pre-check before you speak to any advisor or agent. You input your age, gender, and lifestyle habits, like some smoking or drinking, annual income, how long you want to be covered, the payout options, one-time lump sum or staggered payments. So based on this, the calculator gives you a quote, not an average on a ballpark, an actual estimate based on real pricing. So the best part is you can tweak things like changes the sum insured, try out a different tenure, include a critical illness rider, and see how your premium changes. It makes the comparison easier without making it overwhelming. So you will bear it often, get the lowest premium, but that is only half the story. Why comparing the term plan is not just about lowering premiums. Two plans with the same quote might differ completely in what they offer. Some plans provide coverage up to age 85, others cap at 65. So some include terminal illness benefits by default, others don't. And then there are riders or small additions that can make a huge difference. So leading providers, including names like Axis Max Life Insurance, offer plans that come with built-in benefits like waiver of premiums in case of disability, or even income replacement options. So these might cost a bit more, but give added security. So that is why a calculator is not just about finding the most cost-effective options. It's about understanding the value behind what you pay. Thank you.